Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, June 2nd at about 12:15 p.m. Eastern. Well, U.S. stock indexes are rising today after a moderation in wage growth in May boosted bets that the Federal Reserve will skip raising interest rates this month, while investors cheered the country averting a catastrophic debt default. And on that genuinely cheerful news, let's go on and look at three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $427.19. That's finally climbing through the 420 level that we've been watching forever, it seems like, or 4,200 on the S&P 500. The index, this index ETF, gapped up this morning after the debt deal was confirmed last night. And as I just said, investors are guessing that the Fed might skip rising interest rates or raising interest rates this month. So that would be, of course, a good thing for the market. Now, we know that the SPY made a higher low in March at about 380, higher than the December lows that were about at 376. So a higher low is always a good thing. It always means that buyers are coming in. They're not waiting for price to come down and retest all the way to the last low. They're actually buying before that happens. So higher lows are usually always a good thing. And we know that after that happened, the SPY returned up to the February highs at 415, 416. Here are the February highs back here. Then it sat down from here. It came back up to these highs and then kind of, as I'm going to say, sat down on the 50-day moving average and waited out the debt ceiling negotiations. And this started in March, and it just moved all the way through April and all the way through May. We had a lot going on, and the market didn't know which way to go. So it virtually, as I'd like to say, just kind of sat down. Finally, in the last week here, and it climbed up to the 20-day moving average, the red line that's now coming in at 415.74. It moved up and sat on the 20-day moving average. Then in the last few days, you can see how crazy it became as traders wondered which way the debt negotiations were going to go. But on positive news in the last few days, it did jump up higher, popped above the 20-day. And so now, as we know, it gapped up today. And again, at the moment, it's at $427.19. So now we ask, since we've had this breakout, can the SPY continue to climb from here? And can it use 420 as its prior highs? Can it use that for price support? We're always looking to see when we trade if what was resistance, and this 420 was resistance, if price can use past resistance as price support once it gets over it. That's always very bullish. Now, the next support level down here is right around 415, again, right around at the 20-day moving average. Then we've got the 50-day moving average. The green line down here is at 411, and that's also right about at price support from a great part of this consolidation. Then we have the 50-day, as I said, coming along at this. Whenever you have price support and indicator support in the same place, that's doubly strong. That's a good thing. It doesn't mean it can't be broken, but it's a good thing. Then we come down here to these lows in April that sat down here. They come in at 404, 405. So yes, it's great to have some positive footing now. And yes, we're going to go on and look at some new opportunities. Just keep in mind that we always want to put protective stops on our trades. Our next chart today is a daily chart of the QQQ, symbol QQQ. As you all know, this represents the NASDAQ 100, which is the top 100 non-financial companies by market capitalization in the NASDAQ. We're talking here Apple, Amazon, Nvidia, AMD, Tesla, all of those tech or momentum stocks. Now, when I captured this chart today, the QQQ was trading at $354.26. We know that since it fell to the March lows here at 285, we know that it rallied very strongly from here and moved above, moved above and stayed above the 200-day moving average, which is the black line, the 50-day moving average, the green line, and the 20-day moving average. We know that it moved in a strong uptrend back up to its February highs. That was potential resistance at 313, and then ripped right through 313 and went up to 321. Sat at those highs for a while on the 20-day moving average, consolidated, dipped, and then pushed higher, dramatically rising here to its current price, again at 354.26. That said, and this is beautiful, yes it is, but I've been in this business a long time, and we do want to check out the 14-day RSI. We've been talking about it recently. We've been talking about right here in May when we said it was over. See how this line goes up over the 70 line? This is the 70 line right here. We talked about the QQQ becoming overbought when the signal line goes over the 70 line. It did, and it dropped down, but certainly not very much. Now, however, it's rising at an even steeper angle. And now the RSI is right at 76, which is high. And that usually means, now you can't say when, but that usually means that price will soften a bit in the short term, and short-term traders will start taking profits. The QQQ as well is also trading at a very high premium to its major moving averages, right now at about 6% premium over its 20-day moving average. Now you can think of moving averages kind of like a stairway, and think that you're going up the stairway and your legs are price. So many times you can walk up a moving average. Think of it that way. Price is walking up the moving average. Every now and then it has to come back down to it or near it, and then it starts up again. You can't hold your leg way, way, way up in the air forever, and neither can on a stair step, and neither can price hold up way, 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 way high over these stairways for an unimagined amount of time. The leg always has to come back down and put your foot on the step, and price at some point will come down and sit on the moving average. So keep that in mind. We don't want to buy at the highs necessarily. So while momentum stocks for the most part are positive now, in the short term, we could see a little dip when and if traders take profits. Our final chart today is a daily chart of the iShares U.S. Aerospace and Defense ETF, the ITA. It has 35 holdings in it. Some of the top holdings are Raytheon, Boeing, Lockheed Martin, and Northrop Grumman. Now, and they were talking about the price of airline fuel lowering today. When I captured this chart today, the ITA was trading right here beneath the 50-day moving average, trading at $112.23. Now, look back with me if you want to. Look back to the left side of this chart. Since September 2022 low at 91, the ITA rallied, then came back down, made a higher low right here, as we've talked about before. That's usually a good sign, a higher low. Then it rallied pretty dramatically here to a December high at $114.29. So that's a pretty big run, and it's a pretty strong run. Then it came back and consolidated into the close. It dipped in January to 108, then rallied up in February with everybody else. Almost everything rallied in February, and then made February and March highs up here right around 117, 118. And you can see a little tiny shallow double top here that did play out. Price broke down through the 20, broke down through the 50-day moving average. When it broke through the 50, you figured it was going to go a little lower, and so it did come down here, sunk to a March low at 108.32, back up right down here, 108, then rallied back up here to prior highs, close to 177, 117 and 118. Finally slid lower in May, all the way down here to lows down here where I put the red mark at $108.14. Then it sat on the 200-day moving average for the past week, probably waiting for the debt ceiling debate to get done because it would very definitely affect aerospace and defense stocks. And it waited and then started feeling good in the last couple of days and then jumped up, of course, in this morning on the news with everyone else. And again today is trading, when I captured it, $112.23. Now, if in the coming week the ITA can stay above the 200-day moving average, and that's coming in at $109.21 right now, $109.21. Now, I mean, could it come back in a little bit tomorrow? All these gap ups usually get filled at some point. Not tomorrow, excuse me. I mean, on this coming week, on Monday, Tuesday. Sure, it could. But if in the coming week the ITA stays above the 200-day moving average, again, right now coming in at $109.21, I may add a small position to my trading portfolio with my relatively tight stop set at 108. If and when the ITA rises above this pivot here and over the 50-day moving average, so if it moves up and over and trades above $114.50 for 3 days, I will add to my position, and of course by then I will have a trailing stop. So you may want to keep an eye on the ITA in the coming week. Now, if you'd like to become a more successful trader, this is the perfect time to check out my online training programs. You can choose from 10 different programs like our popular flagship product, 7 Steps to Successful Trading. Plus, if you'd like to learn how to swing trade, trend trade, bottom trade, and much, much more, please check out these trainings. You'll find out how to elevate your trading skill set and increase your gains quickly and easily. To see all of my online training courses, simply go to the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.